Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free technical video report for Wednesday, June 20th, 2018. So the markets have been chopping around. They did make the high when we were expecting it, and right now we're just trying to evaluate what is going to be the depth of this of the decline that we're seeing right now. And it's one of the things that we've said from the beginning is this isn't a time to get aggressive. We are anticipating that the market was going to move lower. It's been very, very choppy and not an easy just short thing, but it's one of the reasons why we've been telling subscribers now isn't the time to get aggressive. There's times to get aggressive, and when that happens, we get those massive drops. Now we can still see a fairly decent drop, but the thing is that it's just chopping around in this chop zone right now. And what our predictive analytics model has been saying, the time-wise, we're in a bearish time, short-term bearish time period. Sentiment hit some extreme bullish readings, and we had some bearish divergences that were in place, and from there, that's what had us leaning on the short side. So this is the we can see that we were hitting the sentiment extremes up here on the bull side, and from there it started declining as the market started chopping around, with the most part with a short-term trend to the downside, as I'll show you on the regular charts. Now if we look at an intermediate term sentiment, you can see that we're still kind of at the highs right now. So even if we bounce up and let's say we head above these highs right here, this would be a similar type pattern like this, where it wouldn't really make it all that much safer to go long, because what happened after that is we had a larger drop. Now Woody has said that when he's anticipating the larger drop, and that was going to be mentioned to members, but what I think right now, what we really want to be concentrating on is when the low date is going to come, because if we keep just chopping around where we're getting these big moves down, and from there we're seeing a buy program kick into place, and for the rest of the day we're on the buy side. It happened 3 days in a row. Today we tried to gap up, we moved down, back up again, and then what happened was we saw a little bit of a sell-off towards the end of the day here, where we only closed up 4 points. So this is from our charts right now, this is the resistance line that I've been showing, and it's really just a channel that's in place, and from here what is going on, here's the lower part of the channel. So if it's going to follow this, then we're heading down someplace into the 2663. Now we have this pattern target that's kind of pretty close to that. That's right around that 2640. Here are the bearish divergences, and you can see we were very, very overbought here, and we never really got into the extreme oversold levels. We just made it a little bit below the 50% range, and you can see with the bounce off of the 200-day moving average on the 60-minute chart, we had the big move up almost it was almost close to 34 points that then hit the 50-day moving average. So this is our little range right now. If the bulls push through it, then what happens is we're probably going to make a move someplace up into the next resistance zone, which is the 2782. Now if the bears can go and say push it through the first line here at the 2762, 63, let's just say 63, then we should get a move to the next support, which is not that far below, only 2758. If this gets taken out, that's when I believe that the odds open up that we can be testing the 2743. We have bearish divergence on this. You can see this resistance line came into play, and right now we have the bearish divergences overbought on the 15-minute chart. We ran into resistance, and right now, if the bears can take out this 2740, then I think we're making a quick trip down to the 2700. If it gets below that, that's when I believe we have a panic move down to the 2674 area. But right now we're still stuck within this zone right now, and again, it's one of the reasons why we've been saying not to get too aggressive on this move. There was never a prediction of a big massive drop. the door was open for it if we started taking out support levels, but we saw buyers step in on every one of the gap downs that we saw, and so right now we just wait and see. Now I got short at the 27.78 was right there. So what I'm doing right now is I'm simply putting my stop right here at the 27, but right around the 27.84. If I get stopped out, it's a half a position. I lose 6 points. No big deal. As I told members, the thing that would hurt would be that, you know, we had a nice move down here. This was my first target, was the 27.41. We made it down to 27.42, and that was when the buyer stepped in. So yeah, in hindsight, it would have been fantastic taking my profits there. I did let my members know that that this was our target one. Now, if target one gets taken out, then target two is going to be the 27.28, and then target 3 2700. From there, then we start looking at the much lower numbers with the pattern targets in place. But right now, you know, I'm just taking this one day at a time and seeing if you know, as long as these highs get right here, this resistance gets held down, and if the bears can push it through, then we start moving into a larger, you know, profit trade. If they head up, then, you know, like I said, it's a 6-point loss with a half a position. There's absolutely no harm, no foul on it. Like I said, it's just more profits that it would have been nice taking them here and then reshorting, but you try that in this market, and what happens is you end up missing a big move because you try to tiptoe in and out of these things. So I like to just kind of set my stop. If, you know, if I get stopped, I don't have to watch the markets. I don't really care what's going to happen. I know the time period that we need to start looking for a low. That's what our members get. That's what we go over. That's all part of the predictive analytics that we do, and it's a timepiece. So right now we know when to start looking for a low. Now is not that time. Sentiment's kind of just neutral, and technicals is in kind of that same boat. We're just in a neutral thing, but short term we do have the bearish divergences. So this would be leaning that we would be getting some type of a pullback. But again, the market's going to do what it's going to do, and if it can get above this resistance right here, then we're probably making a move somewhere up into the next resistance, which is the 27.83. But if things play out and time wise we still believe that it could be bearish and we start heading down, then we know when to start looking for the low. And the way that the Nasdaq and the Russell 2000 are acting, if we kind of go up and down and make a low somewhere here, and you know, we have the Nasdaq and the Russell that are, you know, testing the previous all-time highs and using it as support, most likely the next move is going to take the S&P and the Dow probably to new highs. It's a possibility. I'm not predicting that far out, but it's something that would line up because we have the other two indexes that are remaining strong, and really it's the Dow and the S&P that are lagging. So if the money starts rotating into them, then yeah, we very well could see a move to new highs, and they will probably start at Woody's low date. But again, you have to know when that low date is, because most likely it's going to come on some type of panic move to the downside. Those low dates very rarely happen when everybody is bullish on the market. You could just tell by the sentiment here. You don't see everybody bullish on the market when we're getting 11% bullish readings. And again, you don't get everybody that's bearish on the market when we're getting these 97%. So typically when we're heading into a low date, you're going to get these types of numbers, and from there, that's when it's a great buying opportunity. And it's the same thing when we're looking for the high date. You follow the sentiment, see when the technical turn date is, and then see where the technicals are telling you where it could reverse. So with that, let's see what plays out in the coming days. And like I said, the low date could be the trade here, especially if we start seeing a little bit of a panic trade, because I think that is going to be a nice move to the upside. But right now, we're still, our predictive analytic model is still looking lower. That's the way it is. Our stops are set. We're either going to have a really nice trade or we're going to get stopped out at a very, very minimal loss. So with that, have a great night, and I'll talk to you guys tomorrow.